Welcome to Study Session 4, Cost Element. Introduction. This lecture introduces you to element of cost which includes material, labor, and overhead. Also, basic method of material pricing include first in, first out, FIFO, last in, first out, LIFO, average price method, specific or unit price, standard price, replacement price are briefly explained. Other things identified and explained in this lecture include apportionment of overhead, overhead absorption, labor turnover, idle time, overtime. Objective. After going through this lecture, you will be able to understand the basic cost issues around material costing, labor costing, and overhead costing. Elements of total cost. The three broad elements of cost are material, labor, and overhead. Each of these can be subdivided into direct and indirect elements. Material cost. This is the substance from which a product is made. It may be a raw or a manufactured state. Direct materials are those that become an integral part of a finished product and which can be conveniently assigned to a specific physical unit. It includes all materials or components specifically purchased or produced and primarily packaging material. For example, carton and wrapping sheets. Direct material is also described as process material, prime cost material, production material, stores material, or constructional material. Indirect material are those which are used for purposes ancillary to the business and which cannot be conveniently assigned to specific physical units. Examples are consumable stores, oil and waste, printing and stationery material, and so on. Indirect material may be used in the factory, office, or selling and distribution divisions. Labor cost. This includes all human effort used in the conversion of material into finished goods. Direct labor includes those that actively and directly take part in the production of a particular commodity. They are specifically and conveniently traceable to specific products. Indirect labor includes those employed for the purpose of carrying out tasks incidental to goods produced or services provided. Such labor does not alter the construction, composition, or condition of the product and cannot be practically traced to specific units of output. Examples are wages of storekeepers, foremen, timekeepers, directors' fees, salaries of salesmen. Expenses. Direct expenses are those that can be directly, conveniently, and wholly allocated to specific cost centers or cost units. An example is hire of some special machinery required for a particular contract or cost of defective work incurred in connection with a particular job or contract. Indirect expenses are those that cannot be directly allocated to cost centers or cost units. Examples include rent, lighting, and insurance charges. Overhead. The term overhead includes indirect material, indirect labor, and indirect expenses. Factory overheads include indirect material used in a factory, for example, lubricants, oil, consumable stores. Indirect labor such as gatekeeper, timekeeper, or works manager's salary, and indirect expenses such as factory rent, factory insurance, or factory lighting. Office and administration overhead include indirect materials used in an office such as printing and stationery material, brooms and dusters, indirect labor such as salaries payable to office manager, office accountant or clerks, and indirect expenses such as rent, insurance, lighting of the office. Selling and distribution overheads include indirect materials such as packing material, indirect labor such as salaries of salesmen and sales manager, indirect expenses such as insurance and advertising expenses. Cost elements can be represented as follows. Prime cost equals direct materials plus direct labor plus direct expenses. Overhead cost equals indirect materials plus indirect labor plus indirect expenses. Production cost equals prime cost plus factory overhead. Total cost of production equals production cost plus office and administration cost. Cost of sales equals total cost of production plus selling and distribution costs. Sales price equals cost of sales plus margin or markup. Example 1. Question 1. The following particulars have been extracted from the costing records of Dinado Manufacturing Company for the year ended 31st December 2011. Given that building is occupied 9/10 by factory and 1/10 by office, you are required to prepare a detailed cost statement showing 1. Materials consumed, 2. Prime cost, 3. Production or work cost, 4. Cost of production, 5. Cost of sales, 6. Profit margin. Solution 1. This is just like the manufacturing accounting that you prepared in ECHO 311. You should first work out the implication of the additional information on allocation of space between factory and office. 3 expenses related to building are rent, building repairs, and building depreciation. The cost allocation for these 3 expenses are shown below. Note, profit margin will be derived as a balancing figure since the sales value is given as follows. The cost sheet of Dinado Manufacturing Company as at 31 December 2011 is as shown below. Material costing. Pricing. The 2 main objectives of material pricing are to charge the cost of materials to production on a consistent and realistic basis used, and to provide a satisfactory basis of valuation of closing inventory or stock. Generally, when an issue is made from stores, the materials requisition will be passed to the cost department for pricing, and an extension of appropriate ledger entries made by debiting work in progress control account for direct material or overhead. Methods of material pricing include the following. First in, first out. Under this method, issues are valued at the price of the oldest batch in stock until all units of the batch have been issued, when the price of the next oldest is used. In essence, as the issues are received, they are charged out of production. Last in, first out. Under this method, issues are charged out of the price of the most recent batch received and continue to be charged until a new batch is received. That is, the last issues received are charged out first to production. Average price method. The average price method is a weighted average system where the issue price is recalculated after each receipt, taking into account both quantities and value. Specific or unit price. The item issued can be identified with the relevant invoice where the actual cost can be charged. This is usually possible with special purpose items bought for a particular job. Standard price. This involves the use of a predetermined price. A standard or planned price is an average price predicted for a period, and all issues or returns will be made at the standard price for the period concerned. Replacement price. Under this method, issues are charged out at the market price on the day of issue. Material costing control. The material controls that are calculated for efficient management for inventory include the following. Economic order quantity. The EOQ is a technique for determining the optimal order size that will yield the lowest possible value of the total inventory cost. It is calculated as shown below. Reorder level. This is the level to which the materials stock level is to be allowed to fall before an order for further supplies is placed. It is given as shown below. Where reorder period or lead time is the time taken between the placing of an order and the receipt of the materials. Minimum stock level. This is the lowest level to which the inventory should be allowed to fall. It is given by the formula below. Maximum stock level. This is the upper level of the inventory and the quantity that must not be exceeded without specific authority from the management of the organization. The formula is given below. Where reorder quantity is the economic order quantity, or simply the normal order. It is the quantity that minimizes the total cost of order and holding of stock. Average stock level. This represents the average addition of maximum and minimum stock levels. It is denoted by the formula shown below. Example 2. Stock control. The following data were extracted from the records of Zahari Ismaila Manufacturing Limited, Kano, for a period. You are required to determine the following for the company. 1. Reorder level. 2. Minimum stock level. 3. Maximum stock level. 4. Average stock level. The solution is shown below. Appointment of overhead. Some overheads arise solely because of the existence of a particular cost center. These overheads are direct in view of the fact that cost center is concerned and can be allocated to it. The majority of overheads are not caused solely by one cost center, and it is therefore not possible to allocate costs directly to individual cost centers. In these cases, it is only possible to apportion costs on a reasonable basis. There are many bases for apportioning overheads, and the choice of a suitable basis is largely a matter of common sense. Examples of overheads together with manner in which they are apportioned are shown below. Having charged all overheads to individual cost centers, production and service centers, there is need to reapportion the service cost centers to production centers. The following are examples of the service cost centers to be found in a typical engineering factory: maintenance room, inspection, stores, canteen, first aid. The cost of these departments will be apportioned to the productive cost centers on the basis of the benefit received by each cost center. Where there are a number of service departments, they may supply their services to one another as well as to productive departments. Finding an equitable basis of apportionment may prove difficult because of a number of variable factors involved. One of the following methods can be applied: simultaneous equation, repeated distribution, apportioning the cost of the service center which received least benefits from other service centers first, and then repeating the process until all service department costs are apportioned. Overhead absorption. Overhead apportionment enables you to ascertain the total overhead cost for each production department. The process of obtaining unit cost is termed overhead absorption. In order to absorb overheads into cost units, the process entails the computation of an overhead absorption rate. Generally, this is computed as total cost center overheads divided by total basis units. There are many bases for absorption. Some of them are as follows: percentage of direct material cost, direct labor hours, percentage of direct labor cost, percentage of prime cost, machine hours, units of output. To obtain accurate cost per unit, it will be necessary to wait until the end of the accounting period to obtain the total cost and the total units of the base of absorption. In practice, it is not usually possible to wait until the end of an accounting period before preparing costing information, and it is necessary to use estimated figures. Such estimates are termed predetermined overhead absorption rates. Such estimates are termed predetermined overhead absorption rates and are calculated as follows: budget overheads divided by budgeted. Take 2. Budgeted overheads divided by budgeted basis units. With predetermined overhead rates, it will almost always be found that actual overheads incurred differ from the amount of overheads absorbed. This over or under absorption may be caused either by differences between actual and budgeted overheads or differences between actual and budgeted basis units. Labor cost. Labor costs can be divided into monetary and fringe benefits. Monetary benefits include basic wages, employers' contribution to pension fund, employers' contribution to national insurance health scheme, production bonus, profit bonus, and retirement gratuity. Fringe benefits includes subsidized food, subsidized housing, subsidized education to the children of the workers, medical facilities, holiday pays, and recreational facilities. Control of labor costs is an important objective of management, and the realization of this objective depends upon the cooperation of every member of the supervisory force, from the top executive to foreman. From functional point of view, control of labor cost is effected in large industrial concerns by the coordinated efforts of the departments like personnel development, engineering department, timekeeper department, cost accounting department, payroll department. Labor turnover. Labor turnover is an index denoting change in the labor force for an organization during a specified period. A high turnover is a costly affair and must be avoided. It is always better to keep the turnover low, but it should not be construed that the factories with low turnover are always more productive. There may be low turnover in a factory for the reasons that the workers engaged therein are below standard, and so they cannot find better place in other factories. Secondary, low turnover in the senior scales may not provide promotion opportunities to the young and promising employees. A higher turnover has an adverse effect on the cost of production due to the following reasons. Change in workers interrupts production. Newcomers take time to learn the factory procedure. There are chances of more breakdowns and of greater cost of repairs of machines. The rate of accidents may increase. the rates of defectives in the finished product may increase, and there may be increased wastage of time. The cost of job advertisements, conducting interviews, and cost of training would further increase the cost and reduce the profits. Idle time. The time when the worker does not work and remains idle is the idle time. The plant, machines, equipment, and other accessories also become idle during that period, and the fixed cost continues to be incurred. As such, idle time needs to be reduced as far as possible. Idle time costs can be divided into normal and abnormal. Normal idle time is one which is incidental to production. The cost of normal and controllable idle time should be charged on overhead expense to the production. If the responsibility for this type of idle time can be fixed upon a particular department, the cost should be charged to the overheads of that department and absorbed in the production cost of that department. Overtime. This is the time worked over and above the normal work hours. The remuneration usually paid for the overtime work is at double the normal rate. Work. Take 2. Wage system. A good wage system is an essential requirement for efficient labor management. Strictly speaking, there are only 2 basic methods of wage payment, viz., wages based on the time spent in the factory and wages based on the quantum of work turned out. These are thus known respectively as the time wage and the piece wage methods of remuneration. Since each of these has its own advantages and disadvantages, attempts are made to combine the two, mainly with a view to overcoming their disadvantages. We have therefore the premium bonus or the incentive schemes, which may either be considered to be merely variations of the two. Characteristics of a good wage system include the following: fair to both parties. The system should be such as may be acceptable gladly to the employer and the employees. For this purpose, the employer should decide the system in consultation with the workers. Easy to calculate. The workers should be in a position to calculate their wages correctly and feel sure that they have been correctly paid. Easy calculation will help the employer also in maintaining simple records. Related to efficiency. Fair remunerations for fair output should be the idea, and remuneration should be related to the individual efficiency of the workers. Minimum wage guaranteed. There should be a guarantee of minimum wages to the workers to enable them to maintain their basic standards of life and to do away with uncertainty concept. Incentive oriented. The wage system should be such that the workers may feel encouraged to produce more and earn more wages. Quality improvement oriented. In the race to earn more wages with an increase in production, the chances are that the quality of the output may deteriorate. The system should therefore ensure better wages for better quality. Definite wage base. The basis or the method of wage payment should be clearly defined and announced in advance to the workers, and it should be take 2, and it should not be changed frequently to suit the interests of the employer. Otherwise, a sense of distrust may develop in the workers towards the scheme. Summary. Material cost includes all the direct and indirect substances used during the production of an item. Labor costs include all human efforts used in the conversion of materials into finished goods. Overhead includes indirect material, indirect labor, and indirect expenses. Methods of material pricing include first in, first out, last in, first out, average price, specific or unit price, standard price, and replacement price. Material control index include economic order quantity (EOQ), reorder level, minimum stock level, maximum stock level, and average stock level. Most overhead requires apportionment based on a chosen basis before overhead can be related to a specific department. This apportioned overhead is further absorbed into the cost units through the process of overhead absorption. Labor costs include monetary and fringe benefits in payment for all human efforts and time involved in the production. A good wage labor reward system should be fair to both the parties and be incentive oriented. We have come to the end of study session 4. Thank you.